Bitcoin and Ethereum, I think they could make a monster move in the next 3 months, like huge.
That's right. The biggest bull in the history, Tom Lee, is calling for a monster move out of Bitcoin, specifically a double up. And we think the move out of Ethereum could be even bigger. All while the Fed is cutting rates within 1% of the all-time high, meaning that we should be statistically on track for much higher markets exactly 12 months from today. Which means bear market? I'm not so sure. That is, of course, if history repeats, and we know it at least rhymes. Add this in with the fact that the stock market is up the exact same amount as it was under Trump's first term by this point in his presidency, and we have to be asking ourselves, is it 2017 all over again? Which we all know led to one of the most historic and parabolic bull runs of all time that only really got started right at the end of the year. So are you part of the most of investors that have zero crypto allocation? I don't think so, and if you want to prove it, go ahead. Take that hand, place it squarely on the mouse, and destroy that like button. As always, if you like the content day after day, week after week, and gosh, year after year now, coming up on 9, soon to be 10 years here in crypto, I feel like I've aged about 1,000 years. Well, I really appreciate you liking, subscribing, and of course, sharing the content around. With that said, let's jump into it. Now, first and foremost, let's get to these comments by Tom Lee, because he has been leading the bull parade in crypto land, and what he said is absolutely ridiculous. Of course, it echoes everything that we've been saying here on this channel, but effectively, this is the time we want to see markets break out. Whether this is the ultimate high of the cycle or not, we want to see a big move here in Q4 2025, the year after the halving. So let's hear why Mr. Tom Lee is so bullish.
We were to say Ethereum, Bitcoin, we try to bucket them into risk-averse assets or risk-on type assets.
Yeah.
Is it fair to look at them that way? We used to compare them correlation-wise to the NASDAQ 100. Is that the fair assessment for how these things trade in the coming months?
Yes. Bitcoin is particularly monetary policy liquidity sensitive. Ethereum has elements of being sensitive to liquidity, but it's also part of this AI moving onto the blockchain and Wall Street moving onto the blockchain and that whole stablecoin ChatGPT moment for crypto. So Ethereum, I think, trades almost like 1971 Wall Street, which was the dollar went off the gold standard, a lot of innovation.
Okay, so this is one of the most insane comparisons I've ever heard, but it also makes a lot of sense because he's saying that the best comparison for Wall Street after the dollar went off the gold standard was to say, okay, well, what assets are going to trade and be the things that react to the growth in this new dollar stimulus? Because we all knew as the dollar was coming off the gold standard, there would be money printing. And of course, the stock market was the best horse to bet on. But Tom Lee here is making this point that effectively you have a 1971 stock market comparison and that we should see all of the benefits of AI, all of the benefits of tokenization, all of the benefits of this ChatGPT-like stablecoin explosion in crypto benefit Ethereum. So he's essentially saying, like, if you want to long something that is the equivalent of the stock market in the 70s, he's saying it's Ethereum. And that's why he's so bullish, and that's why they have gathered up what is almost a significant chunk of what MicroStrategy has done in the past 6 or 7 years. He's done in what feels like 6 or 7 weeks. They have almost $10 billion worth of ETH, which is 1.8% of the supply, almost halfway to their goal of 5% of the supply. Absolutely insane.
Ethereum essentially is a growth protocol, and that's why Bitmine is so aggressively acquiring Ethereum.
So getting back to this, we've seen that when the Fed cuts rates within 1% of the all-time high, not just when they cut rates, but when they cut rates when the markets are hot, when there's confidence in the stock market, when there's confidence in the overall investment landscape, the results are very obvious, and that is over the next 12 months, there is a 15% gain. If you were to go in and see what this looks like overlaid on an actual market chart, you'd see that a 15% gain here from where we're at, is right here, 7,600 on the S&P 500. We're at 6,600 right now. That is absolutely insane as far as new growth after there's already been literally from the bottom here in the 2020, in the recent sell-off we had this year, we've already seen growth of 38%. So that would extend up to a 59%, 60% rally here from the lows. And we actually happen to know that it was mostly retail that bought in, not just the institutions, showing actually the opposite of what I thought was true, which was my assumption that when more financial knowledge would be spread and sort of propagated throughout the world via YouTube, via social media, via just everybody understanding investing at this level, because there's all this information out there, I thought that what would happen was you'd end up seeing probably some of the more undesirable effects happen. You'd see some of these strategies stop being valuable, but instead what you saw was that the retail traders actually out-traded the institutions over the last 12 months, and that is something to behold. But we still live in this confusing era where nobody has an allocation to crypto, and that could have something to do with this absolutely staggering chart. This is into the cryptoverse. Okay, this is into the cryptoverse. This is Ben Cowan's site. And he has this orange line. You can see it is the social risk. And you can see that there's a social risk score of 0. We're not talking about a mid-level social risk. By the way, it was a 100. It was a 1, right? It was a 100 at the peak in 2021, right? It was a 100 right here, right as there was the sell-off began. You could see that the actual peak here, the first peak was at 85, and then the second peak was at an 85. In fact, the 2021 peak or the 2017 peak was at an 85 as well. Yeah, so maybe we should make it a note to ourselves that 85 is actually the real peak that we should be scared of. Anything above 85 is probably the time to be selling all your bags. This is a really interesting indicator. But anyway, what we see here is we're at a zero. So why does this cycle feel so different than the other cycles? Because it is different. And that can be explained with one of two ways. Either this, we're not going to have a cycle and retail is just burned. They don't have the money. There's no stimulus checks. The crypto's not as new. It's not as exciting. It's not as wildly overstimulating as it was in 2021 and 2017. Maybe things are just different this time. And that difference is going to lead to a more muted bull run. It's going to be more institutionally driven. And that's just the way it is. It's just going to be different. That's one take. The other take is that we just simply haven't seen the liftoff socially because of the difficulties in getting out on the risk curve. And that effectively every time we've inched up on the risk curve, people have jumped into altcoins, myself included, and that over time there's just been a fatigue, right? There's been a fatigue because of those alts, the ones that have kept going up have been, not all of them for sure. Obviously, a lot of the altcoins we cover on the show have seemed to hit local bottoms and they're just going sideways. They do not seem to be bleeding out anymore. There's no new sellers. Like those coins have hardened. Whether you're talking about coins in gaming, coins in AI, wherever you name it, those coins have mostly bottomed and they're just looking to sort of begin their trip back up once new blood comes in. That's how I feel about the market. But regardless, this social risk score is absolutely crazy to see that there is just no interest in crypto, no interest, as Bitcoin is sitting at $116,000. It is one of the craziest phenomenon I've ever seen in my life. It won't be this way forever. This is a temporary situation. And the question is, what triggers more excitement, more euphoria, more emotion into crypto? Because without the euphoria, without the overexcitement, why should there be a crash? There doesn't just have to be a crash because it's scheduled. It's not like things get scheduled like a train comes into the station and says, oh yeah, it's time for the entire market to fall apart. No, the market falls apart because everybody's bidding it up illogically and emotionally, getting socially very excited, and then there's the hangover and crash. It doesn't have to crash unless you get this irrational upside. I don't see why you would have a crash without that. So I'm not that worried about a bear market until I see a real, true, irrational bull market. Why would there be an irrational bear market? Certainly there could be a downtrend, but not a full-scale collapse, not if there wasn't a full-scale expansion. So that brings us back to the question, what should we be looking at? First and foremost, I'm looking at Ethereum. You can see it's just sitting here between that 4K and 5K resistances. And it's only a matter of time here before it gathers its strength and eventually breaks out. I don't know exactly how high it's going to go, but I would be shocked if we don't see at least 7,000 or 8,000. But I'm definitely betting that we see a 5-digit ETH this cycle. I think it's going to happen. If not in Q4, we see it in 2026. That's my belief. Again, I'm not trading my belief. I will let you know if I end up selling coins in Q4. Hopefully we get a wet and wild Q4 and we can sell some coins. We all deserve a win. We definitely all deserve a win. But regardless, BitMiner, which is something that I flagged for you guys around this $32 mark, this is definitely one of the best plays. You can see here, it is coiling up so beautifully. This is just one of the most beautiful patterns I've ever seen. You can see the announcement spike here, and then it just came down and it went, pretty much just ranged here beautifully until we got this first pop. And now we're just ranging again. And I think we'll essentially work our way back up and all the way up. That's like my plan for BitMiner. But again, something to note here is over the last few times, BitMiner bottomed perfectly at the bottom of the money noodle. If you have the M noodle indicator here on TradingView, you can see it, and bottomed here and here right at the bottom of this gray money noodle. And so if it comes down here into this pocket, that would be another place to buy it, probably in the mid 40s if it comes back down there. I don't know if it will. Maybe that train has sailed. But again, these things can tend to pop hard and come down hard. So I would not put it past BitMiner to have some better entries coming in the not too distant future. future. Coinbase as well looks very good. It's bounced off this support here around pretty much 294. It bounced off that several times. It looks like this has become a bottom and it wants to kind of ride this back up. So we're going to see how that plays out. But again, Coinbase just announced on their Base protocol that they are going to be launching a Base token, based. I'm not sure what they're going to call it, probably Base. And in the end, that is going to bring a massive stimulus to their L2, which is one of their biggest differentiators. When you look at the competition between, Robinhood, who just got into the S&P 500, and Coinbase, who was admitted a few weeks before, well, Robinhood is trying to become Coinbase as Coinbase tries to become Robinhood. They're both trying to become banks. They're both offering all kinds of financial services. Robinhood now has its own layer 2 blockchain on Ethereum. So they're becoming very much so direct competitors. And the question is, what will set them apart? And I think that Base, that ecosystem, is way ahead of Robinhood's ecosystem. And so they need to take advantage of that and really push forward on that as much as they can. And I think that they will try to do that with the Base token. It's no surprise to me that the Base token has come as an announcement very shortly after we heard about the Robinhood L2. They're very, very close in tandem. So this is very interesting stuff. And you can just see these two. I own them both right now in equal proportions. I think my hood actually went up a little bit from recent buys, but I've owned Coinbase for a very long time. At any rate, Coinbase looks like a much more sort of reasonable valuation, significantly off the high. What is this? 25% off the high. I don't know if you're going to get much better than that. I think the next phase of the market is up, and I believe Coinbase will be going for proper new highs, a sustainable run above 400 here. So again, to reiterate, you could play this a few different ways. But I want to be clear, when you see social risk this low, that means two things. One, if there's an altcoin that's sort of sitting going sideways, that's probably near the low. If new social risk starts to get added, if new people start to get added to this ecosystem, chances are that they're going to buy altcoins because that's where the new retail go almost always. And they're going to bid up altcoins. So you could either get ahead of that and wait there. But right now, there's actually no real evidence of people rushing into crypto. So you could play the hand that's in front of you, which is these digital asset treasuries, which are bringing crypto onto the stock market in the Michael Saylor way through things like Bitminer, through things like MicroStrategy. There's actually a lot of them. But the core assets that benefit from this currently, right now we have ETH with Bitminer, but we also have significant other ones like BNB. Look at this BNB chart. I mean, absolutely a thing of art. It never even came that far down in the bear market. It's made new all-time highs. And apparently there's a deal coming through for Binance with the DOJ. This means that sort of the dark clouds around Binance are going to be washed away. And we could see some real price performance out of BNB and the whole BSC ecosystem. Binance itself, this is a huge, huge net benefit to BNB. So this is great. We might even see CZ get more active back in the ecosystem now that his name has more or less been cleared, his time has been served, and Binance has been freed. Again, Solana has one of the biggest and most aggressive digital asset treasuries. And one of the things that they're doing is they're actually treating it like an operating company. It's important to understand these coins, the way that these foundations for Solana, like the Solana Foundation, the Avalanche Foundation, they have to take a somewhat, hands-off approach. And that was because of the regulatory climate. But these digital asset treasuries that effectively amass, billions of dollars in Solana, for example, they can be very hands-on. They are for-profit entities. They can go ahead and make investments, drive outcomes, and operate this like Silicon Valley companies. And we haven't gotten to see what that kind of corporate structuring can look like around a coin. Now, you could ask yourself, is that good? Is that bad? Is that cypherpunk? I'm not worried about that. What I'm trying to say is these digital asset treasuries are going to operate more aggressively than what we've seen in the past. This Solana chart honestly looks really good. From the bottom in April, it's just been up only here. Now up, 170% from the bottom. We were flagging that chart when Solana was getting into the low hundreds, saying, look, this is a juicy, juicy deal. Solana is one of the coins that's going to benefit most. BNB is going to benefit. But of course, our beloved Hyperliquid is another one that is going to have a huge treasury co with HypeD. You can see one of my favorite analysts here, Capital Flows, who I'm actually going to have a podcast on X coming out with soon. He's talking about his big bet, longing HypeD, the stock, which is the Hyperliquid treasury company. He has a really beautiful thesis here, but it's not hard to understand why Hyperliquid plus a treasury co is going to make the already insane buyback model on Hyperliquid go into overdrive. And I'm very excited to see what this HYPD chart can do. And absolutely no slouch here is Avalanche, which has raised $1 billion to create crypto stacking vehicles. I believe this is across two deals. Yeah, there's two different deals, one of which is being led by Hasib over at Dragonfly and another one by Hivemind. Again, AVAX has a huge catch-up trade ahead of it. And I'm sure you guys remember I've been calling out AVAX here in this sub $25 range for what feels like forever. Since the Black Hole project got announced, I was talking about how AVAX is one of the biggest bets, and here you can see it's finally broken out here from this initial consolidation. Going to probably come back here and then go for much higher. And as it does that, you can see here that the fees and the volume generated on Black Hole have gone parabolic as well. This barely scraped by the 1 billion mark, barely 1 billion. It's crazy that I say that. But the weekly volume on Black Hole last week barely hit $1 billion. And this, with more than 24 hours ahead of the weekly epoch ending, has already hit $1.2 billion. You can also see this more clearly on DeFi Llama. You can see the DEX volume is going for what almost is a new all-time high. The all-time high was about 312 million. You can see that the prior days below that were about 280 million. And you can see that 278 million is the current 24-hour period for Black Hole volume. So you can see that this is a huge push up from the lows. So some of these lows were 51 million volume on the big dip here. And you can see that this is the power of the best-in-class product, the best DEX, I believe, that has been built to date. And the journey for Black Hole in this technology stack is just this is just the beginning. This is about to go crazy. Again, the point here of Black Hole is that you're enjoying the fees, that you're enjoying the volume, that you're not speculating on the token. The token price going down just allows you to get more and more of the fees and volume. Again, speculating on the token has never been something we've talked about. We are talking about speculating on the volume, the upside, the fees, the passive income that can be generated from participating in this ecosystem. And finally, I hate to say it, but I was completely wrong about Pump.fun. Now, I personally don't like what Pump.fun has brought to the ecosystem. I think it's created a net losing game, not just for those meme coins on Pump.fun, but for the entire ecosystem with so much dispersion, the liquidity getting shredded across way too many coins. But regardless, Pump is here to stay. And the reason why I think Pump is here to stay is actually because of their new live streaming platform. Now, we talk about applications that can actually take mainstream audiences and convert them into crypto. And right now, you're seeing creators earning insane amounts of money from launching coins on Pump.fun and streaming to them. But the difference is that they're not just making it by selling the coin, they're making it from the fees. The creators are getting the fees from the trading of that coin, and they no longer need to sell the coin to actually make money. So the live stream effectively is just this sort of dancing show that people use to create more excitement around the coins. Now, is this sustainable? I don't know. But I think if this can be the beginning of the first real mainstream application, entertainment application that leverages a crypto model. So this is what I think is actually very significant. And for the first time ever, this is because of this new model. Of course, you can see Alex actually did a stream on Pump.fun. I think he crashed the website yesterday. But what's crazy is the monetization here is more than most creators will ever earn in a year, sometimes forever. $300,000 for just flipping on and streaming. Of course, that's not every creator, but many Uber drivers are just flipping on their cameras and making 20, 30 grand. That's life-changing for people. That is a significant change to their life that year. And so if this flywheel can continue, now you're going to see Pump.fun actually rivaling Kick and Twitch. I'm not saying I believe that thesis yet, but I am saying that both price-wise, Pump.fun has come back from the dead, and narrative-wise and technology-wise, they've launched a very cohesive product here that is working. So this is something that I have on my list to start building a position in. Hopefully we can get a big sell-off in Pump. I don't know if it's coming, but if we do, I'm going to be there to buy it up because I'm actually very excited about the entertainment aspect of this. I was not excited about the meme coin aspect. I don't think it's good for the ecosystem, but they have definitely delivered on this live streaming portion of their offering. And this is a huge opportunity. If you are just a random person, you can flip on a stream on Pump.fun, launch a coin, and you could make maybe 5 grand, 10 grand, 20 grand, but you got to do it quick. When you look at the buyback ratio that they're doing, this is research here by Simon, you can see that Pump is actually undervalued. It has a significantly lower multiple on their market cap to revenue than Hype. So you can see here that it actually has a smaller market cap to revenue annualized multiple, and there is a catch-up trade that could be done here on Pumps. So this is an interesting piece of data that shows that if you love the Hyperliquid trade because of all the revenue they're making, then maybe the Pump.fun trade fits in there as well. I personally didn't like it until I saw the live streaming component, and now that I see that actually working, I think that this is a piece of technology that is more meaningful than I originally thought, and maybe, just maybe, it will bring in significant fresh blood to crypto. Now, I don't know how this plays out, but I would say that building a position in Pump, maybe not now because it's gone through an astronomical price explosion. I don't like to buy things that have gone up that much, but this could be a big trade here if they're able to truly stick the landing and make Pump.fun streaming go truly mainstream. Now, just like Pump, which is now at $8 billion, the market is extremely excited about new launches for these launch pads. The newest one is called Soar, and as you can see, they've been getting hyped up nonstop by the Solana main account. And so this is one you want to have on your radar. Shout out to them for sponsoring the channel. And of course, a huge shout out to Blowfin, which if you guys are not trading short and long, there is a huge opportunity to add leverage to your trades by effectively buying the coins that you believe will continue to go up with a bit of leverage. I personally don't really trade heavy leverage. What I like to do is take the coins that I'm confident might go up. So really simply take a coin like Ethereum. And as you can see, as it gets closer to these support ranges in the low 4,000s, if I'm confident it's going to go up, you take a long position with, 2 or 3 times leverage, which will allow you effectively, if Ethereum goes up 10%, you'll make 30%. If it doubles, you'll make 3x. And then what you're saying is you're betting that it won't go down more than 33%. Because if it goes down 33%, that would mean that you get fully liquidated. So you lose more on the way down and you gain more on the way up. The way that I don't recommend this unless you're a really good trader is to trade aggressively breakouts and different types of short-term trading. You can do that, but I would highly recommend getting into a course and getting into a group. Speaking of which, I'm going to be giving out 100,000 super tokens to the people who trade on this link. And of course, if you're crushing it, you can hop into a private group with me in Q4. We're going to be setting this up once we get a new crop of retail, some new blood in here. I'm going to be taking the best of the best traders and creating a mastermind trading group, because trading is honestly one of the best ways to mentally wrap your head around price action. And when there's high confidence moves in the market, I think it's a really good addition to a fundamental sort of news-based, cycle-based analysis. The stuff that I like to do here on the channel pairs well with a trader's mindset to help you understand when to get into coins. Like for example, Pump.fun. We were just talking about Pump.fun here, and say you really want to get a position in Pump.fun, but you're buying at the Pico all-time high. Well, maybe, just maybe, if you had a trader's mindset, that would tell you, hey, you would want to get back in right here as it retests this prior all-time high of 0.072. And a decent mentality is, hey, when it comes down and it touches this line, maybe you get the perfect reaction right off as it blasts back up. Sometimes it might come down even a little higher, but that doesn't matter. Essentially, a trader's mindset would say, buy the retest of the all-time high. That's a high confidence level here. And then you could get your position, add a little leverage, and be off to the races. Again, trading with leverage is always riskier. There's always significant more risk. So understand that as you get into trades, you can trade with my link to get access to that potential 100,000 super giveaway, currently worth 60 grand. And they also have a 10% cashback bonus when you deposit new liquidity. As always, shout out to Blowfin for partnering with the channel. That's it for me. A huge move coming out of Bitcoin and Ethereum. If you enjoyed this video, make sure to click on this one popping up right now, and I'll see you very soon on the next episode.